Welcome to HAC's monthly commentary. Today we're going to take a look at what happened in the markets in February. We're also going to take a look at some of the changes HAC made in its portfolio, and we're also going to take a look at what possibly could take place in the month of March. Last month, the S&P 500 was down 1.4%. The S&P 500 started the month on a positive note, but towards the end of the month, we saw the stock market decline as tariff talk increased. It's a lot of negotiations and talk about what tariffs would be implemented and what the counter tariffs would be. This caused a lot of uncertainty and volatility in the markets. Last month, HAC made a lot of changes in its portfolio. Today, I want to talk about some of the major changes that HAC made. One of the dynamics that we saw take place in February was that we saw the defensive sectors of the stock market perform well relative to the S&P 500, the consumer staple sector, the utility sector, and the healthcare sector. Now, on a seasonal basis, we can see the consumer staple sector and the utility sector do well in the month of February because February tends to be a weaker month of the year. As a result, HAC took on positions in the consumer staple sector and the utility sector. Last month, HAC also took a position in short-term inflation-protected bonds. These bonds tend to do well on a seasonal basis in the first few months of the year, based upon increasing inflation expectations at the time. Last month, HAC also increased its position in the metals and mining sector. The metals and mining sector tends to perform well at this time of the year, and there has been a shift into some of the commodity sectors in 2025. HAC also increased its position in the Canadian energy sector, which starts its strong seasonal period in late February. Last month, HAC exited a number of sectors, including the consumer discretionary sector. The consumer discretionary sector has been underperforming the market. As a result, HAC exited the sector. In addition, HAC also exited the retail sector, which has also been underperforming. Typically, the small caps tend to perform well at this time of the year, but they've been underperforming the S&P 500. As a result, HAC exited that sector. HAC also exited its positions in gold bullion, gold miners, and silver. HAC exited these positions late in February as they finished up their strong seasonal period. In addition, we've seen some short-term technical weakness with these sectors. We saw the RSI, the Relative Strength Index, move from an overbought position and cross below a trigger line, indicating a possible sell signal. So what should we expect in the month of March? Well, March could be quite volatile as the implementation of tariffs from the US on Mexico and Canada and China, and perhaps even Europe, and counter tariffs go back and forth. Everybody's got an opinion about which sectors of the market are going to do well versus other sectors. So that's going to provide some volatility in the markets. On a seasonal basis, March tends to be one of the stronger months of the year. We find that the commodity sectors of the stock market tend to perform well later in the month, heading into April, which is particularly strong for the commodity sectors. We'll have to see if that trend develops this time around. Thank you for joining me today. I'd love to know your comments on the stock market in the month of March. Don't forget to subscribe, and we'll see you next month.